think next week we're going to have a God candle and it's going to go up to 35,000. Like everyone thinks the halving is like priced in, but I think, in reality, it's not, right? We're going from 900 Bitcoin per day being mined, sold on the market, to 450 Bitcoin being mined every day and sold on the market. That's a huge change.
Bing bong. We're back with another edition of the State of Bitcoin podcast where I got Matt of Atomic Finance. They've recently made a big move of switching from, using a little bit of ETH and Bitcoin to just Bitcoin only. So let's dive right in, man. So why the change? And congratulations on it, dude. You finally, you guys got a little sense to you now, huh?
Yeah, we went down the wrong rabbit hole there for a bit, Brandon, but I think we got on the right track. I think there's lots of folks that they go through their shitcoin days and then they come out the other side. So it's no different with us. We actually made the change a couple years ago. I think it was like 2020 or so. We were just sitting there. I remember the week that happened, sitting there with my co-founder. I had been kind of pushing him towards, hey, we should focus on Bitcoin only. And finally, he actually went and read the Bitcoin standard. And that's what, put us over the edge to say, hey, you know what? What's the asset that's going to be around for the next 10, 20, 30, 50 years? Well, we know Bitcoin is, but is Ethereum? I don't know. And so that was really what pushed us over the edge to want to build that, that infrastructure that's going to be around for the long term.
Yeah, and I mean, it definitely seems to be the case, right? I mean, obviously, I'm a Bitcoin maxi, so I'm a little bit biased as well. But I guess how kind of difficult was it a change from like kind of going to a company where you maybe had a little bit of the shitcoinery going on with the ETH and all that kind of stuff, and then kind of going over to the Bitcoin only side of things. Was that like more of, I guess, a difficult transition from like, I guess, like more of a marketing perspective? Like, talk a little bit about that and like just kind of going through that phase, in a startup where you're not only transitioning from like corporate world to like, hey, I don't know like about this funding round, all this kind of stuff, all the complexities behind a startup, to not only doing that, but doing a pivot in the business as well.
Yeah, I think as a startup, we were very fortunate to have, raised a round. So we a seed round kind of about 6 months before we made this transition. And so what that looked like is us actually going and we actually launched a product directly on it was kind of a cross chain product. So we'd actually been involved in kind of cross chain things for a while. I was working previous to Atomic Finance on atomic swaps between Bitcoin and Ethereum. And what was cool about that is some of the folks on the team were actually Bitcoin maximalists. And so they were the ones that really taught me the values of, hey, the Bitcoin supply cap, or the fact that Satoshi really gave us this gift in, in disappearing and kind of being around in the early stage and then disappearing. And so that's really kind of where I learned the values of Bitcoin. But I realized at the time that there weren't really any kind of financial tools that were available for Bitcoiners, at least in a non-custodial manner. At the time, there were, you could get like a Bitcoin-backed loan, for example, using some type of centralized entity, one of those being BlockFi, of course. But there weren't really any tools that allowed for you to do this kind of in a more DeFi manner or a more non-custodial manner. And so the first product that we did was Atomic Loans, where you could lock your Bitcoin as collateral, and you could actually get a loan in a stable coin on Ethereum. And what we realized was essentially, what we realized after launching that product was that most, Bitcoiners were just okay using CeFi, and most Ethereum folks were, okay just using wrapped Bitcoin. And at the same time that all this was happening, DeFi summer was coming to fruition, where all the shit coins were coming out. We didn't feel comfortable being a part of that. And so what we said is like, hey, you know what? There's this really interesting primitive that's coming to light called discrete log contracts, or DLCs, that essentially allow for you to do contracts directly on the Bitcoin chain. We should investigate that and figure out, what we can actually do with that. But yeah, it was a pivot, right? It was a pivot in a startup to say, hey, instead of focusing on Ethereum, Bitcoin cross chain, we're just going to focus on Bitcoin because that's what we think is going to be around long term.
Yeah, and that's awesome stuff. So, I mean, you kind of mentioned it a little bit already, but let's back up. Let's talk about atomic finance. Like, what do you guys do? And yeah, what are you guys kind of, I guess, like aiming for this last quarter of the year here?
Yeah, so we're Atomic Finance is a really simple mobile app that allows for folks to get access to returns or yield on their Bitcoin using automated trading strategies. So we specifically use options for that. So the one strategy we have out right now is cover calls, and so really it's about for us it's about building sound finance for sound money. So if we remember, so to understand a little bit of why we're doing that, we have to go back to last year. If we remember, there was lots of folks that were kind of offering financial tools for Bitcoiners or a way to earn yield on their Bitcoin, but they were all black boxes. Let's think back to BlockFi, to Celsius. You were giving your Bitcoin to someone and you didn't know how the yield was being made. And as we all know, if you don't know how the yield is being made, you are the yield. And if your Bitcoin is being lent out to someone and they lend it out to someone else, what are the chances that you're going to get that Bitcoin back at the end of the day? We always like to say the line, 8% APY, you'll never enjoy on Bitcoin, you'll never see again, right? And so for us, like our whole goal here was like, how can we provide a way for folks to be able to earn a return or earn sats on their Bitcoin in a non-custodial manner where they can see exactly how that yield or return is being made. And then in general, build a platform that allows for people to get access to financial tools for Bitcoin that doesn't require them to just give complete custody of it, to a centralized exchange where they're at risk of being rug pulled at the end of the day.
Yeah, and that's the biggest thing, right? It's all about that rug pull. Like, I mean, exactly like you said, the 8% APY, is it even really worth it at this point? And I think it's kind of interesting because it's almost like a continuation of like the fiat world because like everybody's gotten kind of comfortable with you have the banking system, right? You put your money in like a high yield savings account, you get a couple percent back, and people are like, "Oh, my money's safe in a bank," but that's really kind of I guess started to blow up in a sense. So from that aspect, obviously you guys started kind of in an interesting time, right? I mean, you talked about the pivot in 2020 when you saw the COVID kind of hit the fan and everything like that. So talk about that. Like, have you seen more of a I guess a need and a desire for the products that Atomic Finance offers because of kind of what's going on in I guess general clown world at this point?
Well, it's interesting because I think there's been a paradigm shift really in the last year. So previous to that, I think there was two camps. There was the Ethereum camp that believed in DeFi on Ethereum, and there was I think most Bitcoiners were kind of okay with you have the majority of your stack in cold storage, and if you're going to do anything else with it, use a BlockFi or use a some type of centralized exchange. And I think after the rug pulls that have occurred in the last year, there's been a shift in people's mindset to say, hey, you know what? Actually getting, financial, if you're going to do something with your Bitcoin, make sure that it's in a way that's not a black box, that you can at least verify to a certain extent exactly what's going on. And so we, for us, I think, and it's also a weird thing too, because I think at the same time, no matter what you're doing, people are always skeptical, right? They're skeptical of, oh, hey, what's this new thing that's being created? I just got rugged last year. And so now as a community, we really need to build up that trust again for people to be able to, get access to products like this. And so, yeah, and it's strange. I think there's a lot of people that just got really affected with everything that went on, with all these rugs that happened last year. Like we lost $20 billion. We can't be having that every 4 years, right? That's the GDP of El Salvador, for God's sake. And if that's going to continue to happen every 4 years, like what's the point of what we're building? Why is it that for Bitcoin, like we're okay with telling people, hey, put your Bitcoin in cold storage, and then if you're doing payments, use Lightning that's non-custodial. But as soon as you want to do something finance related with your Bitcoin, it's go to a centralized exchange, and that just seems insane to me.
Yeah, that I mean, it is insane to me as well. I mean, it's more of like I guess trusting the third parties, right? I mean, it's like, hey, that's what the resorting tactic is. So, talk about like the non-custodial aspect of things. Like, how difficult was it to implement that? And yeah, I mean, I guess what's the overall response to that? And I guess I don't know how much you could peel back the curtain, but like with these option contracts and everything like that, like how does that even work?
Yeah, absolutely. So I guess first off, like how do you do like we've all heard about how do you do financial tools on Bitcoin, right? That's the underlying question. And lots of people like what was the original solution? Doing things like WBTC on Ethereum, wrapping your Bitcoin or going to a centralized exchange, right? Those were kind of the traditional ways that we did any type of financial tools for Bitcoin. But what's great is actually back in 2017, Taj Dryja, who's the same guy who wrote the paper for Lightning Network, he also wrote the paper on DLCs, discrete log contracts. What's a discrete log contract? It's a very simple Bitcoin Oracle contract that allows for any type of primitive to be created directly on the Bitcoin blockchain itself. This means bets. This means futures contracts, options contracts. So let's break it down. Like imagine you and me, Brandon. We want to do a bet. People are doing bets on Twitters all the time. Hey, who's going to win the presidential election? Is it going to be Biden? Is it going to be Trump? Say for the sake of the example, I'll put some money up for Trump. You put up some money for Biden, and maybe we just in the past we would have just said, hey, Brandon, let's create this bet on Twitter, and then it comes around to the results day, and you're like, I wasn't really serious about that bet, right? It's called counterparty risk, right? Your counterparty doesn't pay up when it's time to pay for the bet. But with a DLC, what you do is both parties actually, they take their Bitcoin and they lock it into a contract on chain. And then what they use is an oracle. And oracle goes and creates an attestation of what is the result of this bet, essentially. And so on chain, this actually just looks like a 2 of 2 multisig. It's a super simple contract. We're not talking about smart contracts on Ethereum. There's been a ton of hacks that have occurred because these smart contracts are so complex, right? $80 million lost in Curve, $50 million lost here. It's like almost impossible for something like that to happen with the DLC because it's just so simple. What do they say? What do they say? Keep it simple, stupid. So that's what a DLC is. And then at the time of the attestation, when the oracle creates the signature, it allows for both, whoever won the bet. Say you won the bet, Brandon, you'd be able to take that signature and actually unlock the funds from that 2 of 2 multisig. And then that can be expanded, of course, to futures contracts or options contracts, which is what we're focused on. I'm not sure how familiar listeners are, Brandon, with options or financial contracts. Maybe we should break that down. Absolutely. So what is an options contract? An option contract, I like to think of it kind of like imagine you have a coupon and you say, hey, you know what? Today the Bitcoin price is $27,000. I think next week we're going to have a God candle and it's going to go up to 35,000. And so what someone can do is they might go and say, hey, I think Bitcoin's going to go way higher. I'm gonna pay a premium, or I'm gonna buy a coupon to be able to buy Bitcoin at a lower price of $30,000. And someone else says, hey, you know what? Actually, I don't think Bitcoin's going to go that high. I think Bitcoin's going to stay below 30,000. And so what I'm going to do is I'm going to sell a call and I'm going to collect that premium from that other individual. And so as long as Bitcoin stays below 30,000, you get that premium back. And so that's essentially what we've built into our app in Atomic Finance. Is it allows for folks to get access to a way to earn a return using automated trading strategies, specifically used by selling calls at opportune moments. So, if we see like a particular trend of the market, it will generate a signal and then it will go and it will sell a call and you earn the premium from that in essence. And so that's how the returns are generated.
Yeah, I know. And it's essentially like, one person's betting on one side and the other side, right? But, the one thing that I guess, I don't know, it seems like you kind of have to have bulls and bears for these short-term movements, right? So I guess what's the response been in that sense where it's like, hey, I'm kind of, instead of, the general Bitcoin ethos is just, simply just hodl, it's, more of like taking a bet on one way or the other. So, I guess what has the response been when you've kind of like presented this product? Because, it is kind of more, I guess, on a trading aspect of things, opposed to more of a, maybe just the buy and hold and keeping cold storage kind of aspect.
Well, I think it's interesting because a lot of folks hear covered call and they think, oh, that means I'm bearish on Bitcoin. But ironically, the times where, our cover call strategy actually earned the most returns was during a very high volatility environment, very near the bull run. And the reason for that is because when volatility spikes, the premiums on options go up dramatically, which allows you to take a very large return. And often what occurs is you'll have a very, Bitcoin doesn't go up in a straight line. It goes up and then it comes right back down. And when it's coming down, in between those spikes, there's an opportunity to, kind of take advantage of the correction on the way up, essentially. But really, what this is, I think there's a fallacy for a lot of people. Absolutely, if I think a lot of people when they're trading, like there's this, trading in general gets a bad rap because how do people trade? They do it emotionally, right? They go out there, they're looking for a god candle or they're looking for Bitcoin to dump, and then it doesn't happen, and then they exit at a loss, and then right after, the trade goes the other direction, and most people lose most of their money that way. But the alternative to that is like, well, actually, what you should be doing with trading is taking like specific methods to do that, right? You should be doing it in a methodical manner. And if you do that, then you're taking emotion out of the equation. And what you're doing is you're taking, there's really an opportunity to take advantage of monetizing Bitcoin's volatility on its way to hyper Bitcoinization. So we all know that, a lot of people DCA and a lot of people HODL, but that isn't necessarily the best, strategy for, long-term accumulation. Even if you do something similar, like, sell a small portion of your Bitcoin, close to the top of the bull run, or, and buy more Bitcoin back, in the bear market or the accumulation phase, you're going to do much better than someone that simply DCAs. And so on top of that, if you can take advantage of strategies that are making sure that you're not making these emotional decisions, then there's really an opportunity to, accumulate more sats. Now, at the same time, that doesn't mean it doesn't come with risk, right? There's no free lunch in Bitcoin, right? If someone's guaranteeing you a certain yield or a certain return, there should be red flags going up because, that just doesn't exist, in the space. Yeah.
Yeah, I mean, for sure, and it is kind of interesting. But let's talk a little bit about yourself, right? So, like, why coming up with this idea? And yeah, like, were you a trader before? Like, what's kind of your background?
Yeah, great question. So I actually originally got into Bitcoin back in 2014, 2013, 2014. My dad introduced me to Bitcoin originally. He's a bit of a gold bug. And so something like Bitcoin, an asset that was outside of, government purview was something that was very, very interesting to him. He's not technical at all. And so I was actually managing it for him at the time. And then, to be honest, I forgot about Bitcoin for a couple of years until 2017. And at that time, me and my co-founder, we were at a university up here in Canada called University of Waterloo. And that actually happens to be somewhat the birthplace of Ethereum. Vitalik originally went to Waterloo. And so while we were there, we got very much introduced to the Ethereum ecosystem. And that's how we went down that rabbit hole before eventually, obviously, coming out of that and deciding to focus on Bitcoin. But that's what originally really interested in us in the idea of how to be able to get access to financial tools for anyone in the world, right? At the time, there was this DeFi, momentum that was building. And so that's what originally got us interested in, hey, like, why is it that financial tools are only available to certain people in certain jurisdictions? Everyone in the world should be able to get access to these financial tools. Why can't we make, that the case? Just like Bitcoin is available to folks around the world. And so that's what originally got us down that rabbit hole. For myself, like, I'm not a trader. I'm a technical guy. I focus on the security, the development of kind of the tech behind, like, DLCs, etc. And we kind of lean on some of our advisors for the trading side of things, alongside my co-founder as well, for developing trading strategies that are effective and methodical. Yeah.
Yeah, so I mean, it is kind of interesting because, like, yeah, I mean, it seems like you were a little bit more on the technical side of things. but then now you're kind of more on like the trading aspect of it. Well, obviously, a little, it's a mix of both, right? But I guess what kind of appealed you to trading and building this platform in that sense, opposed to, I guess, was it just something that you saw as like a need in the market because there wasn't another platform like this? Or did you see it as like, hey, like, I'm trying to grow that Bitcoin stack because, one Bitcoin is one Bitcoin. So if I can get in on trading and I find an edge or whatever, like this is where I can kind of go from here.
Yeah, well, I think I've always been kind of interested in the idea of being able to take advantages of, opportunities in the market or inefficiencies in the market, and being able to grow, my own Bitcoin stack. And at the same time, I think, as a founder, it's all about building a product that you're really interested in yourself. So being able to have access to an automated strategy that takes advantage of those inefficiencies is something that was very compelling to myself and my co-founder, and also other members of our team. And so that was really exciting to us. Like really, I think there's an opportunity to take advantage of monetizing Bitcoin's volatility as we move towards the future. And the other thing too that really I guess encouraged me was back in 2015, a portion of when my dad originally got into Bitcoin, we were affected by the Cryptsy hack that occurred, or I guess it was really a rug pull. And so knowing that occurred, like that's always been kind of in the back of my mind, that like, hey, like why isn't there a better way to be able to get access to these financial tools where I know that I'm not going to be rugged? And so that's one of the things that really inspired us to build what we're building, because we realized that, hey, like, people are building this in Ethereum, but it's just as easy for these rugs to occur. You have multi-sig admins that exist there. You have these smart contracts that can be hacked. On the Bitcoin side, you have just like centralized exchanges. Why isn't there a way to build a financial tool for Bitcoin that is unruggable? And so that's been a really big part of our ethos, is like how to make something a product that is unruggable. So yeah.
Yeah, you don't want to make a product where there's a potential of the rug, right? I mean, that's where you run into some trouble. But let's talk about the overall Bitcoin market, like kind of where things are at, right? I mean, we had a big run up yesterday, and then today it kind of came back down a little bit, where we're sitting maybe 27,000. I normally don't talk too much about price, but yeah. So kind of where do you think we're at? And obviously with this halving coming up here in May of next year, like where do you kind of think we're going? All right. Thank you so much for listening to this podcast on YouTube. But if you're looking for just the audio versions, you could search the State of Bitcoin or Macro Insights podcast wherever you get podcasts. That's Apple, Spotify, Fountain, Podcasting 2.0. It's the new wave. If you want to earn some sats or maybe stream me some sats while listening to this podcast, go ahead and check it out on Fountain. You can search it wherever you get podcasts. And if you haven't been to El Salvador yet and you're looking for a reason to do so, meet me down at Adopting Bitcoin Conference. I'm going to be down there moderating some panels. You can use promo code GREENCANDLE and get 10% off your entire ticket order. And you can come hang out with me in El Salvador. Maybe we'll go surfing, we'll drink some good coffee, eat some cool food, and hang out with a bunch of Bitcoiners. All right, enough for me. Let's get back to the show.
Yeah, I think, to be honest, people are probably over bullish at this exact moment. They're like, oh, the halving's coming up. And everyone asks, is the halving, also, is it halving or halvening? I always say it wrong.
I would say having.
Okay, I think that's right. I think I did a Twitter poll, and everyone roasted me. So
Yeah.
anyhow, so like everyone thinks the halving is like priced in, but I think in reality it's not, right? We're going from 900 Bitcoin per day being mined, sold on the market, to 450 Bitcoin being mined every day and sold on the market. That's a huge change. At the same time, it's likely that people are over bullish right now. We're probably going to have one more, downturn, and then we're going to get into the bull market. But I could be wrong about that, but we'll see what happens. How about you, Brandon? Where do you think we're at?
Well, I mean, I kind of agree with you. I think, people kind of, actually, I take that back. I think people account for the halving way too much. So my personal opinion, right? I mean, over 90% of the Bitcoin's already in circulation, right? Like less than 10% is there to be mined. So, would that really 10% be the driver of the overall price change? I don't really think so. I think it's more about the human behavior. It's more about the hodlers. It's more about, the 60% of Bitcoin wallets that have over one Bitcoin haven't moved in the past couple years. I think it's more about that opposed to, more about the halving. And, when we if you kind of take a step back, I've had TXMC on who is a trader, so maybe he'd be interested in something that you guys offer as well. But if you take a step back and kind of look at how the Bitcoin cycle works, it's more in line with like the business cycle of things. Like people like to equate it to the halving. It just kind of coincidentally lines up with these 4-year cycles that also coincidentally lines up with like the presidential elections. So, I mean, it's like, it's all these kind of things that kind of, I feel like coincidentally lines up in these 4-year cycles where, I don't know, call me conspiratorial or whatnot, but I'm just connecting a few dots here, Matt. So, I think like we're definitely going to go up next year because I think, the overall macro environment isn't great, right? I mean, we have, you're in Canada. I'm in Tampa, Florida. So I mean, it's probably a little bit different, but it's all kind of involved in the same realm where it's a lot of uncertainty. The Fed's raising rates a lot. The markets are crazy. People are kind of going to options products and kind of throwing their money at darts and stocks and things like that. And it's been kind of crab walking at this point. So I think it'll be interesting to see once things kind of turn the other direction, how Bitcoin responds. And I think it'll respond well because people will start to, I guess, in times of uncertainty, they'll go to more hard assets, which usually that's been historically like real estate or gold, where I think now people are trying to look at more things like Bitcoin. So I know I just kind of rambled on a little bit. So if you got something to reply to that, then feel free.
Well, that's actually a wild way. So we should break that down. That hypothesis that the election cycle has like coincides with the Bitcoin bull runs. I guess 2016, 2020, 2024, right before the election cycle, and then right afterwards you have a bull market. And that also coincides with basically I guess it's a combination, right? You have the election cycle that occurs. You also have the halving that occurs. Is it a correlation of the two that results in this occurring in every like a 4-year cycle?
Well, and it's also that too. And then there's like, if you look at like the business cycle too, right? I mean, I could sit here and like pull up a little bit of chart for one, but it's kind of bad audio. But anyway, it's like, it kind of like the cycle goes up and then it goes down. It's just it kind of occurs every 4 years. But, generally speaking, we've seen that business cycle go up and down. But if you kind of just take a step back and don't look at the in-between years, it looks like it's straight up. And that's how we kind of felt like it was from 2010 to 2020. Whereas like, there was little bumps in the road and things like that here or there. And the economy was doing better at times and then doing worse at times and other things like that. So I think, with a combination of all these things, it occurs the way it occurs where you see Bitcoin run up. Whereas, Bitcoiners kind of think the macro doesn't matter. They think that, and I'm not saying this about all Bitcoiners, but I think that, a lot of Bitcoiners like kind of try to find Bitcoin and try to escape from like the overall fiat world. Whereas like we're still in it, unfortunately, right now. Or fortunately, if you think you're scooping up cheap sats, I don't really know. But either way, we're still kind of in this fiat space, and that fiat space involves, job cycles. It involves like markets moving up and down. It involves a lot of these different, factors that affect the Bitcoin price. And at the end of the day, as much as Bitcoiners, once they get deep in and down the rabbit hole, they don't want to admit it. The ultimate signal is the price, because that's what normies pay attention to. Right. So I think, the business cycle aspect of it, along with the presidential election and the halving, like all of these kind of make this cocktail that have caused the run-ups. Now, I think the halving aspect of things is going to be accounted for even less as we go down the line, obviously, because it's going to be less and less. And if you've kind of taken a step back and looked at it, when Bitcoin runs up, like it's not like the halving occurs and the price immediately shoots up. It's usually like a few months delay. And every single cycle, it's been a little bit later. So, obviously Dan Held had that super cycle theory where it eventually would just go up forever. I don't know if I necessarily subscribe to that, but I do think that eventually the Bitcoin like run up will occur months later, maybe even a year after the halving cycle, opposed to, hey, it's the halving, like buckle up because we're about to take off.
Well, I think it's interesting too because like at every run up that we have, it takes that much more capital flowing into Bitcoin to make any significant moves. And so I think it's interesting because you're I think you're touching on on a really good point around the fact that um it's Bitcoin trends more and more over time towards essentially a stable coin in essence. And the other fact that I think is interesting this cycle is with the Fed raising rates so much, it's created an interesting situations for homeowners that are affected by mortgages, for folks that if there's not as much kind of free capital available in the system, how is that going to affect this upcoming cycle? If people have less money available, how is that going to affect the Bitcoin cycle? And I think the reality is it does at the end of the day. And so we always have to think at the end of the day we're still in fiat land. We still need to deal with fiat land, and Bitcoin still reacts much more strongly to macro than any changes that could possibly occur within Bitcoin itself. And so yeah, that's an important thing to keep in mind, I think. Yeah.
All right. Now, for a little quick break to shout out my sponsors, PlebLab, the #1 hackerspace in all of Bitcoin. So go ahead and check them out at pleblab.com. You can go ahead and buy some sort of course if you want to become a dev. They got a great Nostra course that you can buy on Oshi, get some sats back. There you go. I'm helping you save some money. And just go ahead and check them out. Like follow them all on socials. They got a bunch of great videos, a bunch of great stuff going on. If you're ever in Austin, go ahead and get a day pass, work there, get on some of the best minds, Super Testnet, and all those guys down there who can definitely help you out with any sort of project that you're putting on. Yeah, for sure. But it's all kind of like interconnected in my eyes, right? I mean, as much as we like kind of want to get away from like the business cycle and those kind of things, but I did meet you and your co-founders up in Canada and in the Canadian Bitcoin conference. So I kind of want to dive into that because you guys are having some craziness go on up there. So yeah, let's talk about it. Like, what do you think Bitcoin can do for the country of Canada? I mean, we've already seen obviously the truckers convoy and things like that occur, but taking it a step further, what does it seems like a lot of Bitcoiners are coming out of Canada and the scene up there is popping. So yeah, let's talk about it.
Well, I think for a long time there's been a very strong kind of community. Even places like Toronto were kind of a hub for early Bitcoin innovation, and then the unfortunate thing is a lot of that became kind of more shitcoin innovation that occurred over time. But there is still a strong group of folks working on really great stuff. Here in Toronto and Montreal and Vancouver. We've got some interesting things that are happening, and you mentioned the truckers convoy. Obviously, we were hoping that Bitcoin was going to help them even more. I think 50% of the Bitcoin that was given to the truckers was confiscated at the end of the day, just because they went and put that on Coinbase or wherever else. And so that's really sad to see. Something that was such a a great movement end up being confiscated, a lot of it, and that just shows how far we've got to go in terms of education. And now in Canada, we're having these kind of nonsense bills come into place, relating to I guess it's censorship. They're putting these bills in place basically around news, where they force like news organizations essentially to either pay the government and register, or don't show news to Canadians. And so if you're Canadian, you go on Twitter and you look up Bloomberg, or you look up some other news site, it will say, sorry, this is not available to you in Canada. And so we're seeing this situation where the internet itself is literally becoming less and less accessible. Obviously, you can just use a VPN, So your question was like, how does Bitcoin fix this? How does Bitcoin fix a broken regime? I know there's Bitcoiners out there that believe that are accelerationists that believe. So what does that mean? That means the faster that the entire empire crumbles, the faster we see a new dawn that doesn't include these problems. But the reality is that there's significant carnage if we go down that rabbit hole. And so, I think the way that Canadians use Bitcoin today is the similar way that the guys at Tahini's are doing it. If you guys don't know Tahini's, they're a great shawarma shop up here in Canada. They have their treasury in Bitcoin, and they've been doing that for a long time. And I think it's really just a way to say, if you're Canadian and you're saving Canadian dollars, you're dying. We don't know necessarily how stocks are going to do, but Bitcoin's really a way to escape. So I think the faster that you get, you take your treasury and you get some Bitcoin in it, and you're saving using that for the long term, I think the better you're going to be able to insulate yourself against the things to come. It's really either that or escape to Costa Rica, like Francis Pulio from Bull Bitcoin. So.
Yeah, I mean, it seems like you really don't have too much of an option these days, which is kind of unfortunate. But I think you're nailing it on the head, right? I mean, I think eventually, people are going to kind of get sick of whatever like regimes are, and they're going to go where incentives lie. And I think that's not only like we're seeing it with businesses in the United States, we're seeing with Bitcoin businesses moving to El Salvador, we're seeing a lot of different things. Like I think more and more people will start to migrate because it's just so easy now, right? I mean, like go back 30, 40 years, it was a little bit more difficult to get on a plane and just kind of, go around the globe. But it seems like that's kind of the norm, so to speak now. So, I mean, it is an ever-changing and developing environment, as well as, not only that, it's, the money situation as well. So, before I let you go, we talked a little bit about like, the DLCs and like the smart contracts kind of aspects of things. So I guess as a Bitcoin only guy, I still get kind of confused about this. So where do you see these playing a role in, I guess, everything going forward? And what the hell is a DLC, man?
Yeah, that's a great question. Well, what a DLC is in essence is really just a contract directly on the Bitcoin chain itself. So it doesn't require any shit coins. It doesn't require any nonsense. It's on chain. It's on Bitcoin. It doesn't require a side chain. It doesn't require drive chains. All the crazy drive chains, folks. It's just a really simple primitive, and that's the way I think it should be, right? Like if you have a Bitcoin that's going to become the settlement layer of the world, then you need a financial layer that can be built on top of it that is just as secure, that retains as many properties of the underlying coin itself. So what is a DLC? It's a smart contract for like built on Bitcoin by Bitcoiners that is super simple and secure. That's all it is. And it's just an Oracle contract, right? So you lock your funds in there. You can do a bet. You can do a futures contract. You can do an options contract. And the main risk that you need to take is based on the Oracle. So, at the end of the day, like the Bitcoin blockchain itself does not have price data, right? If I just look at the Bitcoin blockchain, I don't know what the Bitcoin price is. I don't know what the weather is tomorrow. That's what we use an Oracle for. That's called the Oracle problem, right? So we take an Oracle and we get them to attest to some data, and they use that in order to create one of these contracts. Now, some of you might think, well, why don't you just do a 2 of 3 multisig, right? You have, maybe the borrower, like say in the example of lending, you have the borrower, the lender, and an arbiter. But the problem there is that at the end of the day, the third party, the arbiter, they first of all know of the existence of your contract, and they can also, collude with the counterparty to screw you out of money without, doing that to anyone else. One of the nice features of a DLC is when they go and create an attestation, that outcome is for everyone. So they either screw everybody over or they give the correct results. And there's also like really nice features of a DLC as well that includes like a refund signature. So in the case that the Oracle completely disappears, you can still get your money back. So you can think of a DLC kind of like a lightning channel that's able to do like financial contracts. Because on chain, like the funding transaction for a DLC actually looks identical to the funding transaction for a dual funded Lightning channel, which is really cool.
Yeah, it does seem like some cool different stuff, right? I mean, it seems like it's not, I mean, it's also built on Bitcoin, right? So I mean, it makes the need for everything else kind of out the window, right? So yeah, is Atomic Finance doing anything kind of along those lines with that? Because I know that you kind of mentioned your main product is more on the options, and maybe I might have missed it before, but yeah.
Oh yeah, so we're using DLCs for all of this. Yeah, so the when you go and invest in the automated strategy, you're actually investing in one of these DLC contracts, and you invest for that for a month at a time, and then at the end of the month, the Oracle actually attests to the P&L of the strategy. And so we run the Oracle and we work with a market maker that takes the other side. That market maker is hedging, so they're market neutral. So essentially what you end up with is the user is able to just invest in the strategy. They're able for the whole month, they're able to see exactly where their Bitcoin is locked for the whole time. And then they can also go and verify, hey, did the Oracle actually attest to the correct results? And then I can see that. And what's cool about this system is that the Bitcoin goes back to your wallet at the end of the month, right? So instead of you going and locking it in some black box and hoping you get it back one day, that Bitcoin comes back to you every single month, and you get to make the decision whether you want to invest in the next month. And so we're doing that today on chain. We have plans like down the line eventually to get this on top of Lightning. There's a whole scalability conversation regarding like DLCs as well, and what happens in the future for Bitcoin and how does that all scale. So we'll eventually be getting onto Lightning and maybe sometime next year as well. So that'll be awesome.
Nice. Well, you mentioned it already, like a little bit about Lightning next year, but what else is ahead of for Atomic Finance? Can you kind of give us a little bit of a peek into the future, like what you guys are planning and cooking up?
Yeah, absolutely. So we've got our first passive strategy out there right now, cover calls, but actually in the next like couple of weeks, very, very soon, we're launching manual options as well. So that means like you can invest in other things than just our strategy. You can do your own options as well, long calls, long puts. So we're really excited to get that out. Obviously, if you're a novice, do your research, understand what you're getting into. These things aren't for the faint of heart. And so make sure you do your research first. And then we're planning to launch some additional strategies too. Really our goal long-term for this is to build really a platform for sound finance and to grow the ecosystem around DLCs and for financial contracts to be built on Bitcoin. We're not the only ones doing this. Atomic Finance is doing it. 1010 Finance is doing it. Lava is doing it. 1010 is doing futures. Lava is doing Bitcoin-backed loans. And so you're starting to see this ecosystem emerge. Just like we had DeFi and Ethereum, we're starting to see that on Bitcoin, but we're seeing it without all the shit coins. We're seeing it without all the nonsense, without all the tokens. We're just seeing basic, financial primitives, built for Bitcoiners. And so that's really our goal long-term, is just to expand upon that offering and allow folks to be able to do more things with their Bitcoin. Yeah.
Yeah, and it seems like basically be able to live in this fiat world with Bitcoin, and instead of having to sell it, and kind of go through those capital gains and all those other kind of taxes and headaches that you might need to deal with. But you mentioned a little bit about like some of these other companies building, right? I mean, so for you guys, you're a phone app, which seems like it's very useful, kind of like interesting in that aspect of things. But are you guys available in any country, in every country? Like where can people kind of find Atomic Finance and go from there?
Yeah, absolutely. So obviously we would love to it's it's such a weird thing. We are all, we live in different, we're humans. We live in all these different countries. And yet for us, we have to, just based on certain, laws and regulations, we have to restrict, sanctioned countries, for example, folks in Russia can't use our product, which is stupid. It's not custodial, but that's, those are the laws that we have to abide by. My belief is we're all, humans and we're citizens of Earth, and why can't, people access any type of financial tool? And, maybe one day that will be the case. So, but we're available in most countries around the world as a non-custodial tool. If you go to atomic.finance, you can download the app for test flight on iOS, and we're going to be on the App Store very, very soon. But I think long term, it's all about building tools that can be used by humans anywhere. There's lots, there's all these weird things that exist in finance. Like if you're say if you're a Chinese person, you can't buy U.S. stocks. If you're a U.S. person, you can't buy Chinese stocks. Why is that? That's just a bizarre thing. And so, my hope for DLCs long term is that a DLC can really kind of represent any type of financial contract. And so I hope that it will that we can over time move towards a more open world where where the finances of your average person and the types of instruments that they can get access to become more and more fluid. So yeah, here's to building a better sound finance for sound money future, Brandon.
Yeah, amen, man. I mean, we that's what we're all trying to do here, right? But there is a lot of roadblocks and hurdles. So, I mean, just like before I let you go, I want to ask just a little bit about that, right? Because it seems like there's difficult to, in a sense, go through all those different jurisdictions, right? You're in Canada, like, I guess you mentioned Francis and Bull Bitcoin, right? I mean, they operate in Canada right now. They're the only ones that I know of that you can kind of go to someplace with cash and buy non KYC Bitcoin at like the post office. They set that up, that whole thing. So obviously kudos to them. But talk about like a little bit of the difficulties in these different jurisdictions. Like, have you guys tried? Obviously just in Canada, but have you tried United States and other areas like that as well?
Yeah, so our app is available like worldwide, except for a very specific countries under the sanctions list. Unfortunately, we have to block those. And so we've done kind of the legal work to make sure that we're compliant with, say, like U.S. law or Canadian law. And so there's lots of kind of things in place that we have to abide by in order to be able to offer products like this. And so, yeah, I mean, it's interesting, right? Like you go and typically like financial tools are usually, in one specific jurisdiction, you build it for Canada or for the United States. But really, when you're thinking of like, sound finance or DeFi, really these are tools that should be available throughout the world and anyone should be able to get access to. And Bitcoin is worldwide, money for everyone. And so I think that's really our goal, for the long term to be able to get to. Obviously, we're not, taking the sanctioned countries off our list right now. They're still blocked. But maybe, maybe one day humanity will be able to, freely transact to anyone in the world without restrictions. I think that would be the goal long term. Yeah.
Yeah, amen to that, dude. Just free sound money and everything like that. The world would be a lot better of a place, right? Fix the money, fix the world. That's what we always say. So,
well, actually, I think there's an even bigger one, which is fix the money, leave the world. Which means like if we fix the money here, we'll be able to improve our technology enough to actually, eventually, explore the galaxy. So I thought that was a cool one.
Yeah, that is cool. Maybe you've been listening to too much Elon, bro. I mean, I don't know, man. I don't know. I kind of like it here on Earth right now. The thought of space kind of freaks me out. Honestly, the thought of like the deeper the ocean, that freaks me out maybe a little bit more than space, because I feel like I don't know. We don't know enough about the ocean and it's right there in front of us. But anyway, that's another rabbit hole we could jump down for probably hours on end. But Matt, you've been very generous with your time. So why don't you tell everybody where they can find you and where they can find Atomic Finance and figure out everything out about that.
Yeah, absolutely. So we're available, as I mentioned, on iOS on test flight. If you go to atomic.finance, you can check it out. We're also on Twitter at Atomic Finance too. What we recommend to folks is, like this is a new thing, right? DLCs are a new thing. Go ahead, try it out with a small amount of funds, 500K sats, 1 million sats. Try out the product, get comfortable with it. We don't put like your whole stack into something like this, right? Keep 90% of your Bitcoin in cold storage, but play around with that 1 or 5 or 10%, and try out some new financial products for Bitcoin. I think you'll like what we've done with the UI UX in terms of, DLCs sounds like this really scary concept, But when you see that, it's really just, you click one button on a mobile app, it becomes, a lot easier to get access to. So we're really excited about that.
Yeah, for sure. And I'll put all that stuff in the show notes. So be sure to check it out. All right, Matt. Thanks so much, man.
Thanks, Brandon.
Thanks so much for tuning in to this great episode with Matt of Atomic Finance. If you enjoyed this one and you want some more content, click on the link right here and check out my latest interview with Tom Luongo. We get into it all. If you've known Tom, he's a wild one, so stay tuned. And if you found some value in this podcast, please smash that like button, hit that subscribe button so you get notified of the next videos. All right, I'll catch you at the next one.